What a week, Jan.
It's been, and the jobs report has probably been the least important of it.
So what does that mean? We're going to get more Fed cuts?
Well, I think it's pretty likely. So, we think 80% probability in September, 70% of 25. And I think you can't rule out a 50 basis point cut, although I think that's quite a bit less likely. There's a lot we don't know yet. The threat's obviously out there. The final announcement has not yet occurred. But if they do actually go ahead with this 10%, then I would expect some more effects, at least on the sentiment indicators. And that I think solidifies the idea that the Fed's probably going to do some more.
So are you saying that this increase in tariffs is different because it's aimed at the consumer part of our economy than previous rounds of tariffs that we've seen in terms of the economic impact?
I think it is somewhat different from that perspective. I think as far as business confidence is concerned, it might actually be a bit more similar. But for the consumer, this is a more tangible increase in tariffs because there will be a bigger price effect. We're estimating about a 0.2 impact on core inflation from this round, and that is going to hit consumers' pocketbooks.
You are normally pretty circumspect in your wording on your notes, but yesterday you said that this tranche could be politically unpopular because of the price effect?
Yeah, I think it's more relevant to a much larger number of Americans because so far, most of the tariffs, with a few exceptions like washing machines, most of it has hit the business sector, but this is going to be pretty visible, I think, in the store. So, people will notice.
Kudlow's on the tape this morning saying the effect will be minuscule. Is that correct?
Well, I think it's a little bit bigger than minuscule. You can argue about whether 0.2 impact on core inflation is, large or small. I don't think it's minuscule. I would say it's going to be noticeable, especially in individual categories. Of course, as you average it out over the price indices, that's going to reduce the overall number. But I do think it's going to be noticeable.
So I was interested to hear you project the rate cuts for the year because you, I think, along with a lot of other economists, felt after the Fed meeting that it wasn't so clear what the Fed was targeting or where the Fed was anchored in terms of the next move. Is that right?
We previously had the 60% probability of a cut in September. And so we did have it as the baseline, but this makes the probability higher, I think. So, I think there are, of course, some questions around what the Fed is targeting. There are a couple different rationales for cutting rates that showed up in the statement. One is inflation is below target. The other one is the global uncertainties. And depending on which of those you put more weight on, you're going to have, somewhat different views on the timing. So, but I do think, some more easing is the most likely after everything that we've seen this week.
Which you don't necessarily agree with?
Well, I think the move towards easing was, probably quicker than was necessary. There were a couple of dissents. Boston Fed President Rosengren put out a statement this morning, I think making a pretty strong case that this is not, a necessary move at this point, even though, of course, things could change going forward. And I think that made a lot of sense to me.